The market gaps up, then spends most of the day moving back down. Should the bulls be worried? This is Invest with Jacob. Okay, guys, so in last week's video, we told you that the mantra was still the same. As long as we're above the blue box, the bulls are in control. The market held on to the blue box on the NASDAQ just barely and continues to remain above that level. However, should the bulls be worried? I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, a couple things before we get into the charts. First, we had 2 winners and a loser yesterday for another winning day in our room. You guys are missing out if you're not in there. We're having a great time trading this choppy market. If you want to be part of a winning team, stay tuned for later in the video. Also, I will be out Thursday and Friday of this week, so no videos on Thursday or Friday. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500, and essentially, last Friday, the market took a nosedive off of this high here, brought back down, broke some key levels of support, but was unable to fully break down into the blue box like the NASDAQ did, as we'll see on the other chart. So the ES is still well above its support area. However, it did break a key level of support right here at 5175, 5177-ish, this trend line. It's down below the trend line. It rejected the trend line today. So there are some bearish things slowly lining up on the ES. However, we are above the blue box. We are still above support. And until that breaks, we give the bulls the benefit of the doubt. This is a bull market until support breaks. Pressure is up. So where are we at in the count? Well, essentially off of this high, we'd call this wave 3 here. And remember, we're tracing out this diagonal. So you'd have wave 4 down. And then you'd have A, B, C up into that 5,300 area to complete the diagonal if the bulls are going to follow through to the upside and take us back up to 5,350 to 5,400, which would be the bullish target to the upside before we look for the market to roll over from there. Now, that's the bull count, and while we are above support and I do give the bulls the benefit of the doubt, I do want to see them break back over this high relatively soon that they made yesterday. That high was at 52.40.25, breaking back over that high, and ultimately this high right here, which isn't much higher up here at the 52.53 area. That gives us a strong confirmation we're on our way to 53.50 to 5,400, and that would be something the bulls need to do fairly soon, as if they start to lose it again to the downside and break this low, the bears can jump on board, start pushing down into this blue box and break support. So they need to kind of hold this up. You'd expect this to be a C leg, and you got a pretty good move up. So we can call this 1 of C, and we'd look for 2 of C down. And then you'd look for 3 of C to break out to the upside. So tomorrow you could potentially have this kind of setup where you have 1 of 3, 2 of 3, and then you have the Fed on Wednesday, which will be a catalyst in one way or the other. And should that catalyst be bullish, you could see the wave 3 break out. Should it be bearish, we could see the actual breakdown. For the bears, they do have a setup, but it's kind of a wonky one. We have a triangle setup. Those are not the most reliable things in the world, as we did have what we would look for as an A, B, and then a C down. We did not get the follow through on that C wave. So what you look at now is you have an A leg down, and then for B, you have the start of a triangle where you have A, B, C. Then you'd look for D and E to complete the triangle, and then you'd look for the breakdown and C from there. So the bears do have a triangle setup. Again, those don't play out all that often. So we will keep an eye on that. If they can't break the low here, if they stay stuck in this range until the Fed, and then we get the Fed and it does this, obviously we got the triangle set up and it played out. I think Wednesday will be the major market mover. Tomorrow I think we probably stay in range. But the bulls really would want to start to hold support and start to build a base for an upside here going into Wednesday if they don't do it directly tomorrow. Over on the NASDAQ, now the NASDAQ does look much weaker than the ES. They came down here, they broke into the blue box, but they didn't break below the blue box. And remember, this blue box is an area, so if they do this, That's not really breaking the blue box. We're looking for follow through to the downside. We're looking for them to break the blue box and continue down to this low here. Now, even though they didn't break the blue box, this bounce is fairly weak, and they spent most of the day retracing some of that bounce. But they can get on board with the start of a move higher here in this C wave up toward the 18,850 area. But in this case, they broke the wave too low, so we have to adjust our count to where instead of this being wave 4 and then A, B, C up, since they came down and broke the low, we have to move our wave 4 over to here. And now we would be starting wave 5, which remember would take place as an A, B, C up into that area. I would want to see continuation of this A wave. Actually, I'd like to see, so A, B, and C for A, then B, then C. That's how I'd like it to look to the upside. That would be a much more complete structure. But overall, the bulls have shown weakness on the NASDAQ. Coming down into this area, they closed below their 21 moving average on the daily, and then today they barely held on to it, and maybe in the after hours are below it again. And that's starting to be a sustained break of a major moving average, especially a bullish one. And should the NASDAQ start to close another day below that moving average, things can unravel very quickly. So the NASDAQ not nearly as bullish as the ES. It has been into its support box, but that support box is support and did hold as it is supposed to do. But the next time they come down, I would suspect that support breaks and we come down and challenge these lows. Now, this support box is a major warning on both charts. Ultimately, to kind of signify that we have a pretty major top in place, we want to see the Fed lows from back at the end of January break. So about 17,489, 490 on the NASDAQ would be the major level after the blue box. So you want to see this to give you the first confirmation. This is your first major warning that the bulls are in trouble. They could technically bring it down and make a higher wave 4 here over this 4. They could technically do that. I don't think that's going to be the case. So we could see that, but we want them to come on down through that blue box and ultimately break down through the Fed lows back here, that 17,475 area or so from the end of January. If they can do that, then I would be on board with turning the market over into a more bearish state. So right now we're above the blue box, so we are bullish. But the bulls have work to do on the NASDAQ and the ES, and they need to do it sooner than later. Guys, if you like the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it, become part of our trading team, work with PT and I, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose to check out these rooms. We also have our training material. We're just about done with our advanced Elliott Wave course. In there, we teach about the advanced fib levels, the diagonals, your double and triple threes, your flats, your triangles. We could have a triangle on the chart right now. Trading Elliott Wave. All of the complex structures that make the chart so hard to figure out are taught in this course. And this is a great builder off of our other course. As you can see on the screen, our members are really loving it. It's helping them figure out these complex structures that we've been dealing with for a while now and helps them make money in the market and understand it in a way that makes sense. Now, if this is too advanced or you're not at this level or you're just getting into Elliott Wave Theory, we also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be very difficult when good news makes the market go down and bad news makes the market go up. And this is because the news cycles don't matter. Elliott knew this a long time ago, and he knew that key levels were what mattered. If those key levels break, he knew what he knew what happened, and if they held, he also knew what happened. This gives you a huge trading advantage over the rest of the market. This course is 25 videos in 3 parts. We go over your introduction to Elliott Wave Theory, where we give you the expectations, your mindset and emotion, the KISS method, and why it works. We go through the chart setup and tools, so you're all ready to go. Every tool you need to use along with Elliott Wave Theory and how and why we use it. And then the Elliott Wave for Beginners area, where I go through each of the waves, how they work, what their parameters are, what happens when they fail, what happens when they succeed, how to find the key levels, and how to trade those key levels. This is incredibly important part of understanding the market, and it gives you a huge advantage over other traders. The really cool part about this course and our advanced course is they are both included in our monthly plan. So if you don't want to pay $67, you can become a monthly member and get both of those courses for free, as well as any other training material we release. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where we go over exactly where we are in the counts and what to expect, as well as answer all of your questions. I go through all kinds of different charts in there, market psychology, trading psychology, why things work the way they do. Those calls are highly informative and well worth the price of admission. And you get all of the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. But if you're looking for futures trading, individual stocks, income trading, as well as advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, income trading, which is killing the market, as well as PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures those trades that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. And if you want to try it out, PT will be substitute teaching in my room Thursday and Friday while I'm out. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, I'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. Say it with me. Above the blue box is bullish. However, the bulls are showing signs of weakness. They are breaking support levels. They are breaking trend lines. And currently, we are in a potential for a move up in wave 5 of that triangle, of that diagonal to the upside. That would target the 5350 to 5400 area. However, if the bears are able to hold on, we could see this triangle play out and a breakdown occur that takes us below the blue box. Over on the NASDAQ, we have seen more weakness than we have on the ES, where they are into the blue box and almost broke through. They bounced out of it, and now the bulls need to take hold and push higher here. In an ABC pattern up toward the 18,850 area to conclude this diagonal. But if the bears are able to break this down through the blue box, we could see accelerated selling into the Fed low area, and we'd want to see that break next. Guys, that is your market update for today. I will talk to you tomorrow.